The last video of this series, we are going to talk about one more accounting document, and that's called the post-closing trial balance. Like any accounting document, we're going to put the name of the company at the top, and the date is going to go here at the bottom. Just the date, no 4-month ended or anything like that. November 30th, 2017. In our original trial balance, we took numbers from the general ledger, and those numbers from the general ledger came from the journal, which had all of the totals from all the transactions that our business had done. We put the transactions in the journal, took the totals from the journal and put them into the ledger, took the balances from the ledger, put them in the trial balance, then did the worksheet, then we did the income statement and the balance sheet, and so forth and so forth. So the original trial balance we had came from the general ledger. But here's the thing. Our general ledger now has changed. We have some new accounts and some new amounts. Like the capital amount is different. It's not 12,100 anymore. It's 15,428. Drawing is 0, as are the rest of our temporary accounts. Prepaid insurance is down to 700. Supplies is 1,284. Those were both different in the original trial balance. So this new post-closing trial balance basically reflects the general ledger as it is right now. So we're just going to fill this out very easily, and we're going to put our account title in here, which is cash, and it has a debit of 13,589. Petty cash has a debit total of 200. Our receivable has a debit amount of 380. Supplies has a new amount, 1,284. Prepaid insurance has an amount of 700. That's different than the original trial balance. We have two payables here. Spawn has a credit amount of 250. Goodrow has a credit amount of 475, and the capital amount $15,428. So the capital amount, remember, takes into consideration the net income, and it takes out owner drawing. So this 15,428 is different than the original owner capital. Now let's check out drawing, 0 balance. Income summaries, 0 balance. Sales, 0 balance. All of the expenses, 0 balances. So guess what? If they have a 0 balance, there's really no sense in putting them here in the post-closing trial balance. Why would we put account names with zeros here? It has no effect on our debit and credit totals. So we're just going to leave them out. You'll notice that all of our temporary accounts have 0 balances, so they're not here. These are our permanent accounts. They're the ones that go from fiscal period number 1, whether it's a month, a year, a quarter, whatever. Fiscal period number 1, and we're going to take these totals into fiscal period number 2. The last step here, obviously, is just to make sure that debits equal credits. Password for this video, CD. As in like an old-fashioned music playing accessory. CD. You tell me the word CD, extra point. In the debit side, we have 16,153. On the credit side, we have 16,153. We are equal in terms of debits and credits. This post-closing trial balance is good to go. That's all I got for you. That's the chapter. The chapter involves adjusting entries in the journal and then in the ledger. All 4 different types of closing entries in the journal. Then we post them to the ledger. The last step is taking our ledger, looking at all the balances, and putting these balances into this post-closing trial balance. Document These, again, are the balances that we are going to take into the next fiscal period. So we know that, for example, cash, we know that we're going to start off the next fiscal period with $13,589 of cash. Same goes for each of these other permanent accounts. We are going to amass more sales, we're going to amass more expenses, and we're going to do the same thing at the end of December when we have a bunch of sales, a bunch of expenses, a bunch of drawing account, and we're going to bring each of those temporary accounts back to zero at the end of next month. And we're just going to keep on doing this. It's called the accounting cycle. All right, that's it for this video. Thanks.